Good afternoon, traders. It's TK with ReadySetFutures.com. It is the 20th of September 2016, and this is your day's market wrap-up. For headlines today, we've got on the E-mini S&P 500 still chopping around ahead of the Bank of Japan and Federal Reserve announcements tomorrow. Crude oil, believe it or not, today we saw a shift lower in its volume point of control. Gold was busted again at its lower value area boundary for a second day in a row. And copper continuing to trade above its resistance, gaining support, but it should be making a move soon. Hard to tell. Today we're going to start with the ES, the E-mini S&P 500 contract. December is up. Let's take a look here. Let's move into our the hourly chart. I'm going to pull this out a little bit. You can see today's action beginning here. Even the past couple days, trading between our lower value area boundary for the volume profile and our developing volume weighted average price post-Brexit. Even for the past 3 sessions here, you can see we've really been trapped between these areas, just chopping around back and forth. Most likely this is because of the upcoming FOMC announcement tomorrow, the 21st, as well as the Bank of Japan announcement tomorrow as well. So continue to expect choppy trading conditions back and forth and up and down. We're not really going to settle into a particular move until we get those announcements complete. Looking a bit further here into the 5-minute action, I'm going to slide this over, and that is the beginning of today's Globex trading. I'll switch this over to instrument-based, and we can see today's action. This is beginning here at the 0630 bar. We'll roll in a volume profile just to take a look. And we can kind of see a little bit of flavor from today's action. Not dissimilar to what happened yesterday, where we ran stops to the top side from the overnight and followed by the downside before we made our move lower. Almost an identical pattern from today. Here's the opening bar. This is 0635. Comes up, runs the overnight stops, followed by a swing lower, running the overnight range, the overnight European session range, back up to run, and before we see a sell-off in price. Notice if you see this dotted red line, that's got a bit more inflection to it. That is the day's developing volume weighted average price. If you're short, depending on the bias that you had in the market today, if you were short, you had several good opportunities to get in off of the open. I should say after the open. You can see a couple bars here traded at and above, slightly above, before selling off. If you were long, again, a trade here at the lower value area boundary up to VWAP would have been a good scalp. But for myself, I have a short bias in the market. And again, I'm swing trading. I'm not day trading this, but I figure I pull it up for you guys just so you guys can have a little bit of insight into what I would see if I were day trading. So again, that is the ES. Just to sum up, choppy, continued chop, leading into the Fed and the Bank of Japan announcements tomorrow. Moving now over to crude. Crude's action today. As you can see, this is the plateau that we've been talking about for about the past now week. After price traded down into it, it has held here, and the volume point of control has now shifted. It had been up here around 47.50, 47.60 or so, and now you can see it down here in the 44.25 range. Price action today, also interesting. Looks like a bit of a round trip within the day. To get a bit of a closer look, why don't we take a move down to the 5-minute again? That's the Globex price action. Zooming out here. And this is the action from this morning. So as you can see, we traded down in the European overnight session here just after 6:30, a few bars after the open. We came, price ran stops down here at the low before trading higher. Of note, it traded directly into our volume point of control before selling off. A good scalp if you were in for short. If you wanted long, it would have been terrific to hold on to it throughout the day. These are some fairly significant moves, 44.08 to 44.75, so that's almost a 30-tick move. Those are big moves for oil, although it is, after Labor Day, and we can expect volatility back in this market. Depending on what your bias is, there were good setups here, both long and short. And as in any market that we look at here at ReadySetFutures, there is an argument to be made for both long and both short. It depends on what you see, depends on the decisions that you're making throughout the day. Heading now over to gold, our headline on gold for the day was busted again at the lower value area boundary. And as you can see, that's exactly what happened. And in fact, it's been the past 3 days that this lower value area boundary has been a significant form of resistance for price action. So coming down here, and we've noted before, we're beginning to develop a lower price channel extending downward. However, the thought here, or at least the premise that I'm maintaining, is gold is in another consolidation phase before a move higher. So we could see price chop around. We could see price actually head down a little further before it heads up. But why don't we move in? We'll take a look at our 5-minute action on gold for the day. And here's today's action: trading lower, moving higher, and then chopping around. This, again, kind of similar to what trading action has been for the past couple days. It has been range bound and it has been choppy. Not unexpected considering the unknowns ahead of us between the Bank of Japan and the FOMC. I'm going to keep saying it, folks, because it's that important. We'll take a look at the economic calendar a little later, and we can show exactly when we can expect some clarity from the Fed. If clarity is what you call what the Fed gives us. If that's your version of clarity, well, it's not mine. So, in any event, we're going to move on now to copper. Taking a peek. As you can see, we've traded back up into this high volume node about a week ago, and we're continuing to trade there. So not only are we not checking that resistance, this may have been it, but we continue to trade there, we continue to build volume there, and I expect a move away from it. This volume point of control, this developing volume point of control, will shift higher very shortly as we continue to trade around this, and then most certainly we're going to see a move away, at least in my opinion, most certainly. In my opinion, that move is going to be lower. We could see copper trade back up here to the top of the range around 230, but I would imagine we'd come back down and check this resistance line, which should in this point act as support before we move away. A couple things that we want to show you on copper that have been consistent over the past couple days. We continue to see, as price is kind of locked into this range, we could see what's really locking it in. So this dotted red line is the developing volume weighted average price from approximately June, July-ish. And you see, as we've traded up, we traded right to it, and we continued to oscillate around it. Both of these green lines, one is the volume point of control from that July time period. The other is the developing volume point of control from this most recent move off the lows of the range. And these favorable pricing areas, these high volume nodes, have begun to capture price. You can continue to see our red line, a red dotted line here. This is the volume point of control that's developed since our move higher. And we can see, yeah, there you go. That's a great little view of it. And that's since the beginning of September. So if we were to see a move lower, we can expect a move lower to that. Alternatively, we can expect to move a bit lower still, down to $2.10, possibly down to the lower value area boundary. But as we continue to trade around here, I would expect our volume point of control, it has shifted higher. So that's a great indication that we're ready for a jump in copper. On the high side, if you're a bull, a great move higher would be up to this upper value area boundary from the move again back in July. Your money, your account, your trading premise. So take it for what it's worth. That's how I'm seeing the market. And that's our look at copper for the day. As I promised, we were going to take a look at the economic calendar. A couple of big things on tap. I've mentioned it a number of times in our daily market wrap up this evening. A handful of items tomorrow that are absolutely impactful. We've got our FOMC meeting announcement for tomorrow. Why don't we take a look and see what the consensus is? There it is. No change in the in interest rates is expected. That's, as you guys have, I'm sure, been watching the news, consistent with what you've seen. We also have Chair Yellen speaking at 2:30 p.m. Eastern Time, giving her typical press conference. We also have the Bank of Japan. They're coming up, also going to be speaking on the 21st. I know we see here we've got BOJ announcement on the 20th. That may be Japanese time, but we expect it to be within hours of the FOMC announcement at 2 p.m. Another item to note, if you guys are day trading crude, petroleum status report, our EIA inventory report coming out tomorrow at 10:30. Monday was not a holiday, so it will be tomorrow at 10:30. And then Thursday, we follow that up with jobless claims, housing price index, existing home sales, and the Kansas City Fed manufacturing index. So those should all be important news items on your radar. Then Friday, we follow that up with our PMI manufacturing index, as well as, an interesting point here, Fed inflation index, and the Baker Hughes rig count. So just another couple items for you guys to keep track of for the remainder of the week. That's all I've got for you guys. I appreciate you tuning in. I appreciate you listening. Please don't hesitate to click subscribe, leave me some comments, and I look forward to speaking with you guys again tomorrow for another great daily market wrap-up. Have a great night. Good luck, traders.